everybody. Welcome back to Compound Growth Investing with Dividends. This is not financial advice, but if you are watching the channel, we're growing a dividend paying portfolio, and I'm going to give an update to the portfolio here and what is in it right now. So, right now, as of today, it's June 7th, and we've already gotten dividend payments in the account. We're growing this account as quickly as possible. So, I'm not going to put here which funds are paying which at this time, but you'll get a little sneak preview here. So, for example, in your Robinhood account, you can do this with other brokerages, but it will give you a summary by the month. I included these, even though they say they're pending, since I'm not making a video every day or anything. Uh, these are the payments that were pending as of today. And you can see this is one of the holdings, the CLO. It's ticker CLOZ, and we're going to go through that. But this is just to show you, not financial advice, but what can be done if I'm looking for passive income. I want a passive income generation, and more than that, just any sort of income generation. Because you got to understand, 99% of businesses and business endeavors fail. Yes, you could be in that 1% of businesses that succeed. So if that's you, go for it or whatever. But if I want more of a guaranteed thing, and I am going after some kind of financial freedom, I want to grow this account as big as possible. So we have these two pending. This is what we have as of June 7th today. We went through, so over here, these are the payments per month. We had April, when I think we basically started the account in the beginning of April or something like that, and more pay. We spread things out, funding the account as quickly as possible. These are not all necessarily the same ticker, the same fund. I'm just putting them in as they come in. So already, it's not even halfway through the month, and we have 308 payment, 683, 249, 626, a 31 cent, and a 570. And then in this column here, this is the total so far for the month. We're not even halfway through the month yet. And then this is the grand total so far for the year. For all of 2025 so far. And we have auto payments on for these different funds. These are the funds, and we'll go over, what is, let's see here. We have QQQI, SPY, CLLZ, JEPQ, JEPE, and MSTY. Not financial advice, but again, these are there might be other funds that interest you, do your research and things. Most of these are designed around not a lot of market volatility, but higher dividend payments. So we will add those up here in a moment. But I'm building this fund in a way of going towards this passive monthly income. $24.67 so far for the month of June. So we're almost up to $1 a day if we were to spread it across the day, and we want to get this monthly up to $1,000 or more. So let's look at what is in here. Well, I already have CLOZ in, so let's take a look at that one. This is CLOZ. It's like a type of loan obligation fund. This is not the only one that's out there. You may want to spread out amongst different similar funds in case something happens to that one, which I will be continuing to spread this stuff out amongst different funds. This is the 1 year, this is the 5 year. I believe this dip was like all these tariff concerns. But look at this. Even with this dip, it only went down about $1 in price. This was the inception. Let's go to the all time. Yeah, this fund is not super old. Looks like it started in 2023. And you can see even the low point was $25 per share. This fund is designed to basically stay steady and pay this yield. This down here, at least if you're on Yahoo Finance, which is super good enough, is 8.42%, and the year to date return on the fund itself is 2.35. We need to minus off the expense ratio. I'm just going to round things off because that's good enough for me. So we'll just say 8% on this one. So we'll go in here. You do need to look at those expense ratios. They do matter. So CLOZ, 8.0%. What's next? QQQI. Let me know if you know other funds that are also good for this kind of strategy. Let's see, 5 year, all time. So this is supposed to follow some kind of NASDAQ 100 dividend payers, but it's got some kind of covered call, call option strategy, which you may want to try to understand. But once again, I mean, the low point of all time, we can even do the 5 year, $43, and the high point is 54. So that is what, almost like a 20% difference. But generally, the fund's supposed to stay in this middle range. That's what we should see over time because we're going after this yield. Expense ratio. Why is the expense ratio higher? Because it just means it's more actively managed in essentially. So expense ratio is 0.68% and the yield is 14. So because we're just going to round these out, we'll just say 14%, just getting a general idea. And I'm over time going to try to balance these. So this is a pretty high one. No risk, no reward, but 14%. These are the yield estimates. SPYI. In Google Finance. So this is like a S&P 500 kind of, it should say down here, call option strategy. And once again, so this should be something I think like S&P 500 companies that they're trading or something. And once again, should stay in a pretty stable range. It's actually, this type of fund might trend up over time. All of these, you're going to see this tariff fear dip here, which is okay, but we're staying in this couple dollar range, and you could mix this strategy with other strategies like buying just the S&P 500 or other larger companies, but this is a particular fund with a particular strategy. So 12.53 minus this expense ratio. We'll just round this off to, this could be like 11.5. So 11.5%. These are not all balanced yet. CLOZ is the highest amount in this fund right now. So if we're going to average these out, if we're estimating, we're going to estimate our final yield, and we'll estimate as if they were balanced. We're going to leave off this MSTY one, which I did put a tiny bit more money into, but I consider it super risky. But you'll see why in a second. JEPQ, let's go for JEPQ. And yield 11.28%. Expense ratio is pretty low on this one, 0.35%. Once again, is this? Yeah, there's a call option. Strategy, look, it says, it's not diversified. So you have to take that in account. I may want to diversify this even wider into more similar funds. This should trend up slightly with the NASDAQ, but overall, notice, over this time, it shouldn't be making huge swings. Again, tariff dip, but I'm expecting it to stay in this like 49 to 55 ish range. Might trend up a little bit over time. For example, the year to date return is negative 0.67, but we're getting this yield. Remember, this is a yearly yield that's broken up over 12-month payments. Not every dividend payer pays every month. I like the ones that pay every month because I like the psychological effect of, just seeing these come in. And when you hold, some dividends will pay on the same day, but when you have a few different funds, they'll start to pay in on different days, which can be like psychologically helpful to know, okay, I'm making progress. And I do have auto payments, auto buys on these. So JEPQ is over here, and we'll call this 10.5 because we're sort of averaging, and I'll be a little conservative. 10.5%. Go here. 10.5%. These will all sort of average out. And JEPI, this one's a little bit lower. Year to date return is 1%. Expense ratio is, again, lower. And this one yields 8%. I mean, this yield percent might be an indicator to me of how risky the fund is. Again, this is a call option strategy, managed, etc. Tariff dip was not as extreme on this one for some reason, and it did go up a bit higher, but I'm overall, over many years, I'm expecting it to sort of stay in this range and continue to pay this 8%. So I'm just going to put 8%. We made one of the other ones lower, and so we'll just average this out. I'm not going to include MSTY in my overall percentage, but we'll still look that one up. Sometimes this one doesn't come up right away, but it looks like the internet's working good today. And yeah, we're going to be just trying to go towards that passive income. So this is a newer fund, started in near the beginning of 2024. So it doesn't have as much history. We are at like a low. So it's possible that this could be like the lowest point this fund will go. I hope it doesn't go lower. This is way riskier for lots of reasons. One indicator that tells me to look closer is the yield. The yearly yield on this is 140%. So if you put $1,000 into this and held it for a year, the dividends are supposed to pay back not just $1,000, but $1,400. Over 100% yield. that tells me this is probably risky. So this is a very small part of my portfolio. Um, I can't give financial advice, but I'm keeping this small. Year to date return is also 24%, even though it's at this low. Let's look at the 1 year. I don't know where they get that. But overall, even the price of the fund is like at a low point. Could it go lower? I don't know, but this is also like some kind of um, option strategy that they're doing. So this is 141% as of today. Some people, I think, have said that this will trend down over time. It'll be 120%, then 100%, then 80%, then 60%. Still might stay at like a 50% yield, which is crazy. And crazy if it stays that way. A lot of investing, I think, is all about my risk tolerance. Um, and you probably got some people out there just YOLOing into this and saying this is guaranteed 140% return. And I can tell you my holdings are down, like the holdings are down something like 12% since I bought it. Um, but that should be massively made up for by the massive yield. So that's that 140%. But we're not going to calculate this in our average. Crazy. Okay, so how do we average these? What we're going to do now, these are not all 100% balanced in my account, but if they were balanced, so what we're going to do, we'll add all these up 14 plus 11.5 plus 8 plus 10.5 plus 8. Those are all the percentages that you see. Oops, I didn't show the calculator, but I just added all of these numbers up. I skipped the 140. Equals 52. So that's adding all these up. And then 1, 2, 3, 4, 5. So we added up 5 of these yields. If I had a new stock, I'd have to do 6. So I'm just going to do divided by 5 because we had 5. So this is saying our average, if these were all balanced, I know my yield is lower than this because my lowest percent is the highest holding. But if these were all perfectly balanced, my average yield on with all of them is 10.4%. So I just put this here. 10.4% average. So that's going to help us with the next part, going after this passive income, making your money work for you. There's different ways to do this. This is just one way. Some people think it's way better to just hold like actual individual companies that pay dividends, like I believe like things like Nike, Coca-Cola, uh, Apple, Microsoft, etc. That's fine, and you can have multiple funds that have different strategies. That might be the safest way to do it. 10.4. Okay, so we went through all these, and yeah, these are the payments so far as of only June 7th. And this is the total for June so far, $24. And I think this might hit $30 this month. Be awesome to I like the psychological effect of saying, yeah, this is making $1 a day. Making money while you sleep. Make your money work for you. Imagine that when this is $1,000 a month. When will that be? So I've talked about this. I do recommend people do this to learn about their future. I just went on Google and typed in compound interest calculator. You're going to get a few of these, and some of them are more complicated than others. So feel free to explore. I just like, usually what pops up for me is this one from investor.gov. Really simple. It doesn't take into account as many like different factors as um, some of the other calculators you'll see, but we're just going for the quick and dirty. So um, we'll do this again. If I started initial investment, if I started with $2,000 and my monthly contribution was $200, that would be average $50 a week. We'll do 30 years, and um, so our estimated interest rate. So we just got our interest rate, right? If we average all those, 10.4%. Um, it gives you a variance, so we'll put in a 1 and it'll calculate as if we had 11.4 and 9.4. And then we're going to do monthly compounding. That's essentially what we have when these pay every month. If you only had funds that paid every quarter, you would want to do quarterly, but there wouldn't be a huge difference. Um, so this says with just this strategy, in 30 years you'll have 500,000, and then if you scroll down a little bit more, um, well, you can see the variance above, variance below, and if you scroll down a little bit more, you click on Show Table, and it will actually show you the value of the fund each month. And then what if we wanted to see the dividend, like an estimate of the dividend payments at certain times, as if we stop funding it? So in order to do that, what I've got to do, I have to go back up to my monthly contribution and calculate that. So the monthly contribution I'm doing is $200, and then we're going to times 12. So the yearly we're putting in this one is $2,400. That's if we did $50 a week. And we need this because we're going to minus it off. So 2,400. So let's go to year 11. The difference between year 11, I'm just going to estimate this stuff to make it just kind of quick and dirty. The difference between year 11 and year 10 is about $5,000, $8,000. So that's $8,000 increase, but then we have to minus off what we put in that time. So we'll do 8,000 minus 2,400, and this is telling us that in dividends alone, we brought in $5,600 at year 11. So you can figure out how old you would be if you did $50 a week in something like this. If you're 30, you'll be 40. If you're 20, you'll be 30. If you're 25, you'll be 35, etc. And then I like to look at what is this monthly. So 5,600 a year divided by 12 is $466 a month. Remember, we're putting $200 a month. So if we were to stop at this time, and this is all the dividends getting reinvested, if we were to stop at this time, we would also essentially be putting $200 a month back in our pocket. So I can do plus 200, and I'll have 666 that I wasn't really using before if I stopped at year 11. And you can do this for all these different years, and once you get up into this $500,000 range, another way to do this is you say, okay, if I had $500,000, then I'm going to do times our yield. So our yield is 10.4%. To change that to a percent, I'm going to do 0.104. Oops. So this is 500,000 times that yield. So $52,000 per year, which is $4,000 a month. We can reverse the math and figure out at what point would we have $1,000 a month, but I can tell you if you had 100,000 or 110,000 in your total account. Let's say you grew an account using a different strategy and now you have this lump sum just sitting there and you're like, well, what can I do with this? Do I just have to start to sell it in order to like have any rewards? Well, actually, no, you don't. If you have a fund with $110,000 and then you moved it to a dividend paying account or just sold those funds and then bought dividend funds, again, not financial advice, but if you were to do that, so let's take the 110 times, we'll just do 10%. 10% yield on that 110 equals $11,000. And then I'll do divided by 12 months is $916. So if you want to get up to $900 a month, of course there's taxes in this, so is part of the equation, but with just rounding a lot of things off, a person could be bringing in an extra $900 a month if they grew their account to $110,000 and moved it into this dividend strategy. What gets really interesting to me is, let's say you had that $100,000 now and you didn't do any monthly contribution. We'll just put $1 in there. For 30 years, we'll keep everything else the same and do calculate. So this says 2.2 million in 30 years. When does it hit $1 million? This is saying if you had $100,000 today and you didn't put anything else in and you did exactly what we're doing here with this average, what would I have in that case? Monthly, and but what if I just did this for 10 years? When does it hit $1 million? It hits $1 million at year 23. If I had 100 grand, I just didn't touch it and just did this strategy, didn't even add anything more. 23 years to $1 million. The $1 million mark is pretty important because that's when it hits. That's when you're getting close to dividends paying $100K a year, and you can tell that because the difference between year 23 and year 24 is a little over $100K, and we're not adding anything. We're adding $1 a month to this. What if you had $100,000 right now and you also had income? Let's say you had you didn't need all your Social Security check, so you had $1,000 in Social Security coming in. Let's calculate that in this. So this is $4 million, and we still started with $100,000, but we're putting $1,000 a month in. Instead of year 23, we're going to hit $1 million at year 16. And then let's do something that could be a little bit more realistic. Let's say you started with $5,000 and you went, more concentrated and you put in $600 a month. Some people might be able to do that. In this scenario, we're going to finish with 1.5 million after 30 years, and we're going to hit 1 million at year 26. But remember we did the calculation for 500,000 at year 20. So if you are 25 years old and you started doing this $600 a month and you started with 5K, you'd hit that $500,000 mark at 45, and it's just going to be growing from there. if you had the 500,000, so we did 500,000 is like close to $900 a month. If you had the 500,000, then you just stopped. 11 million. So they say you got the 500,000 at age 45, and then you just stopped putting any money in. In 10 years, you'd have 1.4 million. But even at year 5, again, we're only putting in $1 a month. At year 5, it's bringing in almost 60K a year. So that would make you 50 years old. Um, Obviously, a lot of people cannot start with just 500,000. But if you could, and then you just put it in this kind of account, not adding anything, it's growing by 50K a year. And then yeah, by year 6, it's growing by like 90K a year. But even that 50K a year, if we do, I lost my calculator. Bring this back up. 50K a year divided by 12. So, I mean, at that point, you're bringing in 4,000 a month just in dividends, obviously, taxes, but you could maybe move down to part-time on your job. You could be, you know, paying your mortgage off, things like that. I like to think about the possibilities. Even if my fund right now it's projected about $30 a month, it's $360 a year. It doesn't seem like much right now, but um, you know, once it gets to $100 a month at the pace I'm going, I think it'll get there. And $100 a month, well, now we're $1,200 a year. Go and compounding, compounding, compounding. Anyways, thanks for watching, and we'll give another update on the account soon enough. We're not even halfway through June, and we're buying into this as quickly as possible. So thanks for watching.